Have you ever looked at a company's financial data and just seen a wall of numbers? You know, it feels kind of chaotic, maybe even meaningless. But what if I told you that inside all that chaos is a really compelling story about a company's health, its performance? Well, today, we're going to do just that. We're going to transform that chaos into clarity, and we're going to build that story step by step. So, this is where it all begins. This is what's called a trial balance. It's basically the complete list of every single account in a company's books. And on its own, it's not super helpful, is it? It's really just a data dump. It tells you all the pieces you have, but it gives you zero clue how they all fit together. So that's the big question, right? How do we take this jumble of numbers and turn it into something that actually makes sense, something anyone can understand? How do we find the story that's hiding in all that data? Well, the answer is you need the right blueprint. I want you to think of yourself as a builder. This trial balance, it isn't a mess. No, it's your complete set of raw materials. Every single number here is a vital piece of the puzzle, and our job is to assemble them correctly to construct something really meaningful. And here is our blueprint for this explainer. We're going to go from chaos to clarity. We'll start by meeting the financial statements we're going to build. Then we'll talk about how to sort our puzzle pieces. After that, we get to the fun part, constructing the profit story, building the financial snapshot, and finally, stepping back to see the big picture. So let's dive into Section 2, Meet the Financial Statements. Look, before any builder starts, they've got to know what they're actually constructing. For us, that means getting to know the two main financial statements that each tell a different part of the company's story. Okay, so let's just make sure we're all on the same page. The trial balance is our complete set of puzzle pieces. It lists every single account, everything from sales revenue to the cost of machinery. Our job isn't to create new pieces, it's simply to sort the ones we already have. Which brings us to Section 3, Sorting Your Puzzle Pieces. All right, builder, this is where the real work starts. We've got our big pile of puzzle pieces, and to sort them, we just need to follow one very, very simple system. And here it is. Every single account in our trial balance belongs in one of just two places. That's it, just two. All the accounts that tell you about performance over time, things like revenues and expenses, they all go into building our first structure, the profit story. And everything else, all the things the company owns and owes, that all goes into our second structure, the financial snapshot. And this is the most important rule of this entire process. I'm going to say it again. Every figure is used exactly once. No piece gets left over, and no piece gets used twice. This is what makes the whole system work so perfectly. Once you place an item, you can mentally check it off the list. It guarantees we account for everything, creating a complete and balanced picture at the end. Now, before we start building, just like with any real-world project, there are a few, let's call them awkward pieces that need a little bit of special handling. If we can get these sorted out up front, it'll make the main construction go so much more smoothly. Okay, don't let the name scare you. These are actually pretty simple. First, depreciation. That's just a fancy word for an expense that covers the wear and tear on our big assets over the year. Next, retained earnings and inventories. The key thing here is that the numbers on our trial balance are opening balances from the start of the year. We're going to have to update those. And finally, accruals. These just help us make sure we're matching costs to the right time period. Getting these right now is going to save us a headache later. All right, Section 4, Constructing the Profit Story. Time to put on our hard hats. We are going to build our first statement for our example company, JK plc. This is the statement of profit or loss, and it's going to tell us the story of exactly how profitable the company was over the last year. So to figure out our profit, the first thing we need to know is the cost of the goods we actually sold, right? We don't want to include the cost of inventory that's just sitting in the warehouse. So how on earth do we calculate that? It's a really simple three-step process. You take the inventory you started the year with, you add all the new stuff you bought during the year, and then you subtract the value of whatever was left unsold at the very end of the year. What's left tells you the cost of exactly what went out the door. So that inventory math gives us a big part of the cost. But for a manufacturing company like JK plc, the total cost of sales also includes other direct costs from our trial balance, things like factory wages and machinery depreciation. When we pull all of those relevant pieces together, we get our final figure, £783,000. And here it is, our finished profit story. We start right at the top with revenue. Then we subtract that cost of sales we just figured out to get our gross profit. From there, we take away other operating costs, like distribution and admin, to find the operating profit. And after a few final tweaks, we get to the bottom line, a profit of £438,000 for the year. See? We've just turned a chaotic list of numbers into a clear story of performance.
So, Section 5, Building the Financial Snapshot. Our first structure is complete, but our job isn't done. We still have a whole pile of unused materials from the trial balance. Now we're going to use those remaining pieces, the assets, liabilities, and capital, to build our second structure, the Statement of Financial Position.
Remember that golden rule? Every piece gets used once. So now it's time to take all the leftover figures from our trial balance. These pieces don't describe performance over time. They give us a snapshot of the company's financial state at a single moment, the very last day of the financial year. Now, this is the really clever bit. This is where our two statements connect. Remember that retained earnings number from the trial balance was from the start of the year? Well, we have to update it. We take that starting number, we add the £438,000 profit we just calculated in our first statement, and then we subtract any dividends that were paid out to shareholders. That gives us our brand new, up-to-date figure. Now we just assemble all the remaining pieces. On one side, we list everything the company owns, its assets. On the other side, we list everything it owes, its liabilities, plus the owner's stake, which is the equity. And you can see our new retained earnings number slotted in there perfectly under equity. Okay, both sides are totaled up, and now for the moment of truth. And they match perfectly. Total assets equals total equity plus liabilities. Now, this isn't a coincidence. It's not magic. It's the fundamental law of accounting. Because we followed the rules and used every single piece from our trial balance exactly once, the two sides have to balance. Our construction is solid. Okay, Section 6, the big picture. Let's step back from the details for a second. We started with a totally chaotic list of numbers, and by following a pretty simple set of rules, we've built two perfectly balanced statements that tell a crystal clear story. So what does it all mean? This process is so much more than just an accounting exercise. You've taken raw data and turned it into actual business intelligence. You've uncovered the story of how a company performed last year and what its financial position is right now. This skill is literally the key to understanding any business from the inside out. So, I'll leave you with this thought. Knowing that JK plc made a profit of £438,000 and has assets over $1.6 million, that's powerful stuff. But it's just the beginning. The real power comes from the questions this information allows you to ask next. Is that profit growing? Are its assets being used efficiently? Building the accounts isn't the end of the story. It's the start of a much deeper analysis.